Hello, good people. This is Darrell with Personal Credit Solutions. Welcome to our video. Today we're going to be talking about, as you can see here, how to use a mortgage calculator. Going to be using an article from Preston Guyton, as you see here. And I don't mind using these articles. There's so many things online, you guys, if you want to get more educated about things like using a mortgage calculator, how to buy a home, what is important, some of the important factors when buying a home. And just to go ahead and add in there, Personal Credit Solutions provides credit education for beginners and advanced consumers. And the purpose of our YouTube channel is to provide education to our clients and to help them better understand the credit repair process. So always remember, bad credit is temporary. Anyone can have good credit in good time. I like to feel the same way about a house. Anyone can get a house. If you want to buy a house, you want to find out the steps to buy a house, right? Anything you want to do, you find out how it's done and you meet those requirements. Not that hard to do. So let's take a look at this video. All right, the internet has been a great source, as they say here, when it comes to big financial decisions. We're in the information age and we're able to get so much information. Mortgage calculators are easy to find. There's one that I like, and I've given you guys a link in the video. You can check that link in the description there, and you'll see what I use here is the bank rate calculator. As you can see up top, it says bank rate here, but I did want to get it all on the screen. And we're going to go over how do you use this to figure out what your house payments are, considering what your down payment is, and things like that. Let's take a look at some of the general basic things that you need to know first, right? So a mortgage calculator is very easy to find, as we talked about. You've probably seen these online. You may want to use this kind of calculator to estimate your payments, decide if an adjustable rate mortgage is right for you, or determine if you can pay off the mortgage early. Now, here's some different things that you'll need to know to make the mortgage calculator work to your benefit, right? Now, the first thing you'll have to have is home price. We know we can go to Realtor.com, Zillow, any of these sites, and see what the home pricing is in our area. Let's not just dream about a house. Let's plan on what the things we need to do to buy the house. Let's plan. Let's accomplish the items on our list one at a time until we get to the point where we can buy the house. The home price is important. You'll need to plug in the final price you're paying for the home in the calculator. If you haven't purchased a home yet or haven't even started looking, you can always use an estimate. You can adjust the number to find the range in the price that will be right for you. See, and this is one thing that we need to do. So I have to do a second video on finding out what your debt to income ratio is, so you can find out how much house you qualify for. It's a lot that goes into that, so I want to make sure we have enough time to go over that. The second thing you're going to need to put in is your down payment. And as you can see here, typically that down payment is going to be 3 to 20% of the home price. If you qualify for USDA, VA, or some special NACA program or credit union program that allows you no money down, then that is also an option. A down payment is usually your best interest. If you can afford at least 20% down, you'll have the added perk of avoiding private mortgage insurance. So if you put less than 20% down, you have a second insurance that you have to pay in your monthly payments, which is called private mortgage insurance. And this is basically insuring the lender. Then you have your own home owner's insurance. So if you want to avoid that, that's the way to do it. Pay less than 20% down, and you'll have that in your payments. Typically, the bigger your down payment, the lower your interest rate, because your lender will not be responsible for financing as much of the house's transaction. And you should see this show up in your calculations, right? Next thing that's important to add to the calculator is your interest rate. Your interest rate is calculated as a yearly percentage of your loan balance. So, for example, if the interest rate is 3%, you'll have to pay 3% of your loan balance each year for the length of your loan. You'll only be paying off interest on the portion of the loan you haven't paid off yet after that, right? So the loan term, how long is your loan going to be? It doesn't have to be 30 years, people. Some of the USDA loans and some of the special loans out there go above 30 years. But typically, it's 15 to 30 years for the term on a mortgage. This is the time that you want to pay on the loan. Every loan is paid off over a different amount of time, and the most common terms are the 15 to 20 years. All right. Location is important because your tax code is going to be found on these calculators by using a zip code. So you use your zip code, and I said your tax code, but I meant your tax value that you'll have to pay for your house. That will also be divided up over 12 months, right? So this is especially important for determining your mortgage insurance payments, while the conditions of the home and its age will also play a key role. The location is more concrete, is a more concrete thing you can add to your calculation. Your location also matters when it comes to property taxes, like I said there. Now you're going to have home insurance in your payments, right? Home insurance is going to be in there as well. What do we need to say about home insurance, right? Not much. It's self explanatory. It's going to insure your home from loss.